Hey, everybody. Hope everybody was doing well. Welcome to the Note Nation Top 40 Tour as the virtual bus rolls into the ATL tonight. We're excited to have everybody here. We've got some great information we'll go through. My big goal for tonight's session is for you guys to walk away educated, knowing what's going on in the market, where the opportunities are going to lie, where the opportunities aren't going to lie, so you're not wasting your time and waiting around for opportunities that aren't going to show up. So, as always, Scott Carson, excited to be here with you guys. This marks not quite the halfway point of the tour. I think we're in market. We're about a third of the way done, actually just over the third of the way. This is the 14th city, so yay. Time is flying by as we're rocking through cities. You can always go to Note Nation top40.com to find out the full schedule and which city is up next. This is the first half of the evening as we dive into the Atlanta market. But anyway, guys, we have a variety of local and national investors join us from all across the country, tuning in here live on Zoom, watching the replay or the live stream on Facebook, or also catching the replay on YouTube. Like I said, we're going to discuss specific statistics or where the market is at right now, what I could find about where it is today and in the near future. Now, we know the markets are going to change. The numbers may come out differently in the next couple of weeks, but here's where we're at and kind of giving you, if I had a glass ball, here's where I think things would go with the numbers. We're going to talk about the second half outlook that we can predict definitely from what's going on in the market these days for both the residential and commercial markets. We'll talk about future opportunities, where you can start looking. Is the future a year from now, 2 years from now, or 2 weeks from now on some of the different things out there. We'll talk about where to look to find those deals, and we'll also talk about how to get started on some different ways for you to capitalize on the opportunity. So our mission at We Close Notes, my mission is to help investors to accomplish their dreams and goals and increase their wealth through debt investing. I've been doing this for over a decade now. Got started back 2008, well before everything kind of got in with the Great Recession, and have made a career of helping investors do this over the last dozen years. Now, if you don't know me, like I said, I've been an active real estate investor since well before that in 2002. Big background in finance, banking, mortgage markets for over 15 years. And I've purchased over $500 million in debt on residential commercial side over the last dozen years, quite a bit actually. The CEO of WeCloseNotes.com, that's our main flagship website. You can go to find out everything we got going on. I've been working and teaching real estate investors how to capitalize in distressed markets since 2004, whether it was foreclosures or short sales or the debt game that happened in 2008. I'm also the host of a very popular nationally syndicated podcast called The Note Closer Show that you can listen to on any place that you listen to podcasts. You can also go to YouTube and catch the videos there, or also we live stream a lot of the episodes on Facebook as well. But I invest all across the country, 30 plus different states. I've got my thumb on a lot of pulses so I can keep track of where the opportunities lie and where they don't lie. And my markets have changed over the last 6-7 years as trends have changed. And I think you'll find that tonight as well for you. And Austin, Texas is home, which I believe, there's a lot of similarities between Hotlanta in Austin, Texas here tonight. So I think you guys are in for a lot of great information here tonight. So why am I doing this? Why am I taking 40 hours of my evenings over the next 2 months, or actually more closer to 120, 160 hours, as it takes about 4 hours of prepared to do each one of these webinars and checking everything out, following with you? It's because I love to help investors. I love helping people out, but I'm extremely passionate about helping real estate investors like you guys that are on the call and watching this right now with me tonight. I love to help people solve problems. We've got a lot of problems out there in the country right now. Unemployment, forbearance agreements, people out of work, businesses failing. What the heck is going on? Can I get a reboot on 2020? There's a lot of problems and there's a lot of opportunities, I believe. And that's what I believe what's going on right now is we have a huge opportunity in front of us. An opportunity. We could sit here and whine and cry in our beer, or whine and moan about how bad things are, or we can take the opportunity and realize that in an up or down market, there's always money being made. And even in a down market, those that are able to pivot are able to act on the opportunities are the ones that come out ahead. And I think we're going to see a generational transfer of wealth here over the next 6, 12, 24 months, depending on what you focus on. And I am also doing this because I was once a distressed borrower back in 2002, 2003, being in default, getting laid off, having to go to forbearance agreement. So I have a big passion for not only helping investors and helping other people out there that are struggling, but also empathizing with people that are struggling. We've got a lot of people out in America right now that are a little unsure of what's going to happen. And I want to help those. And I'm a big fan, hey guys and gals, there is nothing greater in life than helping others out there. Look, we're all in this to make money. Can we agree that if you're a real estate investor, you're out to make money, definitely. But if you can help people along the way, hey, that's even a better thing. Help them save and stay in their house, which is a dream for most people, buying their first house or raising a family. Look, we all go through obstacles and one on our way to getting things. If you can help somebody overcome those obstacles to achieve a goal or dream that they thought was impossible, I think you're doing God's work. And then otherwise also, guys, I've got a goal to help 1,000 investors in the next 12 months. That's my big goal I set for myself. I believe in setting big goals, but I believe in the next 6 to 12 months, we can really help change the world with 1,000 investors doing some big things across the country. So where are the opportunities? Let's dive into this stuff here. Everywhere. They're just not in one zip code. I don't care what your focus has been in real estate, if it's self-storage, if it's apartments, which has been those are two of the hottest asset classes, or you've been trying to take down single-family homes, or you like cash flow mobile home parks, or you like office buildings and commercial properties, or you're looking at hotels and hospitality. There are opportunities everywhere. And I don't give a rat's ass what the color of your skin is, where you live, if you're a business owner or you've been laid off, there are opportunities right now for everybody. And it's easier to get in what we're going to talk about tonight than most people make it think. There's a lot of people out there that will say, oh, you can't do this. It's complicated. It's so difficult to be on you. That is not the fact. Banks are now, like they were 2008, 9, and 10, getting very, very nervous because they've carried and financed a bunch of this stuff. And they're looking for individuals like you and me to make a difference. And they don't care what color your skin is. They don't care what sex you are. They don't care what is going on in the world. All they care is that you can help them. You can close on deals and you make a difference. And I guarantee there is nothing sweeter than helping borrowers like you and me out across the country, whether it's business owners or they've been laid off. A lot of people are going through bad things right now, and they need people to come in and step up with solutions. And that's why the opportunity is so big tonight. So let's talk about the national numbers. I promised to get you out of here before an hour. So national numbers say that we're currently seeing an 11.1% unemployment rate. Those are June's numbers. Okay. Slightly went down a little bit between May and June, which is great. It's a good thing, but still 1 out of 9 people are unemployed. And with what's going on with the government bailouts, a lot of people aren't going back to work because they're making more on unemployment than they were working, which is not right. We can agree to that. That's got to change at some point. Over 40 million people are collecting unemployment across the country. That's such a huge number, And the thing is, some of you guys that are on here tonight or watching this may be in that phase. Nothing wrong with that. Government's here to help you out with that stuff. But what you do with those time off of what you're doing while you're sitting at home collecting unemployment can be all the big difference in 6 months for you. We know and expect 52% of small businesses to fail, if not more, in other parts of the country. And that number is going to get worse the longer this goes on. And depending on what market you're in, it's worse instead of in other places. We already knew that before all this happened in March, 10% of homeowners were already 30 days behind. 1 out of 10 homeowners were already struggling to stay current. Now, you don't hear that. You hear, oh, we have a default rate of less than 3%, which is okay. But people were already on thin ice before this happened, before they get laid off, before they get furloughed. It's not a good situation. Currently, right now, this month, we're at 7.76% national mortgage default rate. 1 out of about every 12 to 13 borrowers are in default. And do you see some, 1 out of 13, it's not a good thing. 4.1 million Americans are currently in default. That means they're at least 90 days behind on their mortgage or greater. And that number is continuing to climb as the longer this thing goes on. 4.1 million Americans. Now, to give you an idea how that compares to what happened 2008, 9, and 10, back then, it took us from 2008 to the middle of 2010 to really see a significant number of 1.6 million defaults back then. Well, we're 2.5 times that amount in a third of the time. So if you think it's going to get better before it gets worse, I'm sorry, it's not. Is it going to be as bad as having 15 million homeowners underwater like we did in 2010? I don't know. I hope it doesn't. But the numbers are starting to stack up. And the longer we kick the can down the road, it's going to get worse and worse and worse across the board. Now, if you look at recently, DS News came out with an article talking about delinquencies are hitting record 2-year spikes. We know this is not a big surprise, but the numbers are across the board. It's not just paper lenders. We see obviously a huge 21% increase, 1 out of every 5. Subprime, or sorry, they don't call it subprime now, they call it non-prime, experienced delinquencies in June, year over year. Increased also on prime loans. That's the second highest one is at 12%. So 1 out of 8 prime loan saw an increase. Reperforming loans saw 6.4. Then 1 out of every 20 borrowers at 5.5% also saw prime loan delinquencies as well. Talking about the economy, let's look at the Georgia market. This is from the Bureau of Labor Statistics out here tonight. Georgia at a glance, you can see across the board, 7.6% unemployment rate. It went down from 9.4 from a high of 12.6. So that's a good thing. That's Georgia as a whole is actually below where the rest of the nation is on an average. That's a good thing. Now, if you look at Atlanta by itself, the Atlanta, Sandy Springs, Marietta, Georgia marketplace, that's higher than the rest of Georgia. Okay, yes, it went down from 12.7, but it still is at 10.3. Okay, still below the national average, but is higher than the rest of Georgia. So that's something to keep in mind. Atlanta, Sandy Springs, Marietta, Georgia, still in that double-digit unemployment rate. Now it's still below 11.1%, still below national average, which is good. But hey, what's going to happen if it continues to spike and we see things? Talking about the foreclosure market, this is from Realty Track. Basically, they have basically 1 in every 4,400 homes in the Atlanta market are in foreclosure. And the top 5 zip codes is 30310. That's 1 in basically every 1,000 is one of the hotter zip codes in the country from us doing our research. It's one of the hot markets as far as increased foreclosure amounts. 30315 is 1 every 1,500. 3037 is 1 in every 2,200. 30311 and 30354 also kind of round out the top 5 there. Now, when you compare that to the prior month, we've seen an increase, especially from May to June, with a number of foreclosure filings. Prior month, it's up over May, 114%. Prior month, bank loans are down, bank owned has dropped down 21% because obviously it's down because of the delays and stuff. But we are seeing an increased number in foreclosures in Atlanta. Now, the new filings have changed by filing type, whether it's an auction or a bank-owned aspect. The numbers, you can see, dropped down like everybody did. They stopped everything from March through May. But you know what's happened? Georgia's like, all right, y'all had enough. Y'all get back to work now. All right, and you see a spike in the filings, okay? You also can see the numbers on the trending here. The number of total foreclosures there for Georgia there, or, Atlanta market there for you, popping back up, trending that way in June. July should be worse. And this is an interesting graph. Realty Track provides this for every city out there. And a lot of the ones I've done, I haven't provided this because it's been basically 0% across the way. But actually, Atlanta has a higher foreclosure rate, double than the national average. Okay, Atlanta is at 0.02% compared to Georgia is at 0.01, and the national average is 0.01 across the country as far as the foreclosures available. But Atlanta's twice that. Now, obviously, 0.02 is still a small number of foreclosures compared to everything, but still, that number keeps ticking up. Now, Black Knight, big company out there, mortgage delinquency increased another 20% in May, the highest level since 2011. All right, another 723,000 homeowners became past due on their mortgage in May. All right, 4.3 million homeowners past due on their mortgage in active foreclosure, including those in forbearance who have missed scheduled payments, up from 2 million at the end of March. Okay, think about that. 2.3 million people from March through May, doubled the number, went to forbearance agreements. Okay, serious delinquencies are on the rise as well, increasing by more than 50% over the past 2 months. Okay, and you look at Georgia here. This is another thing. We know that the delinquency rate is 7.76. All right, month over month, 20% increase in that. And then you look at the number of properties increasing across the board. Year over year, we got a 263% increase. Month over month, 723,000. Okay, number of properties that are 30 or more days past due but not in foreclosure is 4,123,000. They're not in default yet because they haven't hit that 90-day mark, but that 90-day mark is coming. So we're going to see from 4 million to 8 million in default. Now, yeah, some people are paying down. Some of them start going back to work a little bit. But by golly, Miss Molly, it's going to get ugly out there because this kick the can down the road isn't solving anything. People being delayed from going to work. And Georgia is one of the the top 5 states as far as mortgage delinquencies percentage. They've increased in the last month by 1.73%. So we saw a big increase there. Mississippi's the worst, Louisiana's second, Alabama's third, Arkansas's tied with Georgia. Actually, Georgia's tied for the top 4. All right, way to go, Georgia. Way to be an overachiever, okay? And part of that is you haven't had the delays or the foreclosure moratoriums like you have in other parts of the country. This is a map. I got to thank my buddy Darren Blumquist from auction.com sending this over as part of a presentation he did last night for our Note Night in America webinars. If you'd like to see that, you can go to notenightinamerica.com or go to our YouTube channel and look at that playlist. But the color codes show different states out there. If it's dark green, statewide, light green, states where evictions have resumed, middle green is current local moratoriums, but the tan, the state said, well, we ain't helping you. And Georgia is one of those things. As of April 6th, Georgia had not implemented any policies related to evictions or foreclosures in response to the coronavirus. And they haven't, okay? Haven't seen that besides what was given by the federal government. They haven't extended things. And that's why Georgia has been one of the states that's leading as far as foreclosure filings, okay? Now, they're at 15%, up 15% in foreclosure activities in Georgia in month over month here for you. So you got to be careful about this. That's for the last 8 weeks from, ending July 11th. That's quite a bit. You're going to see increase there in Atlanta for the most part. Now, we all know, we've heard about this. We know that mortgages are not really underwater because the values have remained strong. But a lot of people out there are in default. Now, if you've got a Fannie, Freddie, government-backed loan, great. They're going to give you 6 months. They're even willing to give you a secondary 6 months, and then willing to negotiate with you after that. So really, if you play your cards right, you could drag your, Freddie, Fannie out a year or more while you're working to get back on your feet. And a lot of them are saying, well, we'll forgive or we'll just tack it on. Some people are going to milk this. We know that's going to happen. Well, that's not good for the banks. We all know that, okay? And if you look at kind of the different loan types, Fannie Mae, FHA loans, not Fannie Mae. FHA's got the highest default rate right now at 9.69% default rate because people have gotten into the properties with very little down payment, or in a lot of cases, the banks financing the down payment, and even financing the move-in costs or the closing costs. We see that across the board. So 9.69 compared to your conventional loans are at 3.16. It's a third less. All right, your VA loans are in at 4.65. Your other all loans are about a 4.36 default rate. Okay, so anywhere from 1 in 30 to 1 in 10. Okay, that's still a lot of opportunity out there if you're in the distressed debt space, if you're in the distressed property space. Just got to know when it's going to hit the market, right, everybody? So moving on here. Everybody says, well, people are filing forbearance agreements and dragging out. Yes, they are, but those numbers are dropping on a week-in, week-out basis as people are starting to get back to work or starting to do some things, which is good. That's a beautiful thing. But we're still seeing roughly at 4.6 million forbearances through June. We'll see. Interesting to see what the numbers come out at the end of July. But that's still, and you think about that, 4.6 in forbearance, remember, there's another 4 million people are somewhere between 30 and 90 days in default. Are going to be that in the next month, okay? It's kind of scary out there. That we should see those numbers either dwindle a little bit, but we're going to see a big number there. So is this good news or bad news? All right, depends on which way you're looking. Okay, Georgia is actually higher than the national average. We know that as far as defaults, they're just a little bit more, not as extreme as other states, but Georgia's a little higher than the national average. It does have a shorter foreclosure time frame, which is what makes Georgia a very investor-friendly state. You can foreclose in roughly 30 days. It's second fastest just to Texas. Okay, you can do it in 21 days in Texas. Georgia has a pretty short non-judicial FHA foreclosure time frame of 330 days, roughly from the time that they go in default there for you. Now, with the backlog of forbearance agreement, even though Georgia's not starting to open it up, you still have a big majority of the loans out there aren't going to go to foreclosure because they can't. They're government backed. The government's going to let that slide. But you still have plenty owner-occupied, investor-style loans, non-owner-occupied loans that aren't government backed that are starting to hit the market, okay? Now, it's going to be a while before you see this huge foreclosure wave. Economists are talking that, it's not going to be dramatic this year. It's going to go roll into next year. That is true. I would agree that you're not going to see a huge wave of REOs hit the foreclosure markets for at least till 2021. You're going to see some stuff get in. You're going to see increase in bankruptcies. That's going to delay some things as well. And so you got to keep in mind, if you're looking for foreclosures in the Atlanta market, you may find some, but you're not going to find, it's not going to be like it was over 12 years ago. All right. They're going to be delayed, and you're going to see that more happen in the later part, the mid to later part of 2021 for the most part. Now let's talk about commercial debt. Commercial debt's not getting bailed out by the government. Okay. We know that businesses are closing up their doors left and right, not paying their rent, filing bankruptcies. Huge companies all across the country filing bankruptcies, trying to stay, not paying their rent, trying to get out of their leases. We know malls are going to be a thing of the past. One of every 2 malls is probably going to be closed. Okay. Commercial real estate's been on a boom for a while, and we knew it was going to end. And for retail, obviously, retail's kind of been on life support for a while. But these guys, the commercial guys, got hit very, very hard. If you look at the delinquency status by property type, this is April, May, and June number. You can see, obviously, lodging, that's no surprise. In breaking down the color code, in red for REOs, that number is probably going to get bigger. Yellow's 90 plus days past through the dark yellow, more the orange colored there. Yellow's is 69 days. Those are going to move in relatively quickly. So office, okay. Retail has been the second biggest hit besides lodges. Apartment is what's it, third lowest behind senior care and industrial, very low in industrial. Okay, people's only places to store their stuff. Single family residential, it's on about the same track. You're arguing, for those that are interested in apartments, you're going to see apartments going to fall. Probably more so on, I would say, you're probably not going to see a lot of your A class or your B class, primarily your C and D, as those people are the ones that are barely making it. They're the ones barely surviving, living at that poverty line, who've been the most impacted by being laid off of work, or in the service industry or the hospitality industry. Okay, now you look at these numbers, you can see commercials all across the board on average, if you look at the totals on there, is over about 5-6%. And in some of the asset classes, we know it's quite a bit higher, like in the lodging side, over 25%. Retail says 15, but that's actually bumped up closer to 19 to 20% as well. So 1 in 4 hotel loans are in default. And we're not just talking big small hotels, we're talking mammoth size hotels. And a lot of banks are really taking a short on their mortgages, willing to sell the debt off to get out of the bad situation. Or to get something now versus waiting to see it be a whole lot worse, because they don't see tourism coming back soon. All right, travel is going to be delayed for some time now. The hotel industry is going to continue to be in difficult spaces. Same thing we talked about retail. Retail is difficult as more and more people are ordering stuff online. They're not wanting to go hang out at malls. Okay, office vacancy, obviously, we know that has increased to 19.4%. The big office spaces are getting vacant, are basically as people are working from home. Okay, you should expect at least a 15% vacancy rate for retail and the restaurant space to climb. And then you're going to also see rents. Vacancy increases, rents decrease by another 10% this year, and then an additional 4 to 5% into 2021. So if you're a commercial investor, commercial property owner looking at buying and controlling some stuff, you have to expect to roughly be at 80-85% of what rents were at these days. Think about that. You've got to be competitive. You're going to need to take a little bit of a hit right now. Now that's saying, depending on how you buy that asset or how you control that asset, can vary. But you can be able to pick up some really good deals right now, provided you've got a little bit of capital to do that. Because delinquency rates are tripling in the U.S. commercial mortgage markets. We've seen this. The CMBS market lost $50 billion in value in March, and they've not gotten it close to back. The big thing you got to keep in mind here, though, is it's a different kind of finance entity. 12 years ago, you had a lot of CMBS guys, the big Wall Street guys, financing a big proportion of stuff. Well, now the local banks, your government banks, your state banks have gotten in and financed a big chunk of it. 64% of distressed commercial real estate and loans originated out of the CMBS market. That was back in 2007, but as of last year, 53% of the loans are part of the bank's portfolio right now. Okay, it's going to get worse. You can see it all across the board. The thing is that these banks are financing these commercial properties at 70%. So investors have had to bring like 25, 30% down payment. Well, when the values drop on these, like they are, the bank's going to go back to the borrower and say, hey, I need you to bring 5 or 10% cash in to keep me at that 70% loan to value or less. If you don't have the cash, it's now in default, and the banks are going to look to move that stuff. I've seen this before. They've had a pretend and extend mentality for a while in some of these asset classes, but you're going to see a lot of this stuff hit the market. I mean, we're already seeing deals. I've talked to two of my guys on Wall Street in New York saying they've seen more deals in the last 60 days than they saw of last year alone, okay? And it's going to get worse. And their biggest thing is they're saying out there is, hey, you can step in, start providing capital to buy out some bad loans or work with the current borrowers to try to reposition the property. There's an exit strategy you can do with these borrowers. They say, listen, hey, let me buy, you buy the debt at a cheap enough price. That gives you a lot of flexibility to work with existing borrowers or take the property back and take it down. Billionaire investor Carl Icahn on here has been talking about this since March. He expected it to be a whole another 2008, another big short. And he says, yeah, it's going to blow up worse than it was, and nobody's watching it. And it's the same thing. It's big short, but instead of being so much in the residential market, it's been more in the commercial markets this time around, okay? You have a bunch of mortgages, so the banks went out and loaned money against a lot of shopping malls, office buildings, hotels, and retail. It's all credible institutions doing it again. They didn't learn from their mistakes. They kept thinking the market was going to go up, go up, go up when we were overdue for correction. Now, the flip side of this is a lot of the Wall Street guys have been pulled their money back the last 2 years waiting for opportunities like this, okay? Now, there's a lot of opportunity out there, and you may be thinking like, well, Scott, if the Wall Street guys are getting it, what does that mean for me? Well, I'll talk about that in a second, okay? Seeing a lot of delinquencies across the board, like we talked about here, 24%. Here's an article that came out in July, and I'll share something. They talked about how the banks out there stand to lose $48 billion. $48 billion on commercial real estate in the next year or two, okay? You got to realize Dodd-Frank's not with the commercial notes. That's only the residential side of things, okay? And last Friday, July 16th, Bank of America now set aside billions for for soured loans, and their shares dropped, okay? Their consumer bank units probably plunged 98% on the jump in provisions. Crazy enough. But how much do you think they've got that they expect to be losing on? Oh, just a little small number, like 5.1 billion from just Bank of America. Now we know Bank of America is kind of the bell cow when it comes to looking at the consumer market space. That's residential and commercial properties. A big chunk of that's commercial. We know that, but they're still having defaults. When those property owners, those business owners go in default, yeah, they can't pay their rent, but if they are not having income when it eventually happens, they can't pay the residential loan. So let's talk about where the opportunities are at. There's a lot everywhere, okay? Is it mean foreclosures and REOs? If you want to wait around 12 to 18 months, okay. But by that point, a lot of that stuff is going to be sold off the books to other institutions, other investors like you and me, or even bigger, buying a lot of stuff. Are you looking for fix and flips? I'm sorry, if you've been in that fix and flip model, you're going to be waiting around for a while. Yes, will you still see some stuff? Yes, great. Consumer, sell to the consumers. That's great. But honestly, if you've ever wanted to level up or really start doing things bigger than doing a lot of the old ways of doing business, now's the time to do it. Rentals, I don't think I'd want to be in the rental market right now. Okay, yes, a lot of tenants are paying on time. That's a good thing. Nothing wrong with that at all, but you are going to see a lot of defaults. There's a lot of work to go along with that. So the real opportunities in today's market lies in the debt game, just like it did during the RTC days in the 80s. The Resolution Trust Corporation, so much billions in debt was sold. Same thing like in 2008, 9, and 10. The big short mortgages were sold left and right. Here's the opportunity right now. That's why I talk about the opportunity in rate right now, okay? You're going to see residential loans, yes, in the Atlanta market. We're already starting to see some of this stuff here. Residential notes from some of the non-government-backed agencies, investor loans, investor programs. It's going to start hitting the market in the fourth quarter, all right? They're going to start hitting because we're already starting to see phone calls. Banks aren't going to hold on to a lot of this non-performing stuff through next year. They're going to take the opportunity to get a big chunk of this stuff off their books by selling it to Wall Street or other banks, other institutions, or, hello, anybody at home? You guys, us, as opportunities to work that out. Now we'll see. We're already seeing commercial notes hitting the market right now. Big banks, smaller banks. There's a lot of opportunity taking place out there. If you buy an asset and learn to pivot it a little bit, just like this guy in Arlington, Illinois, took this hotel, converted it to 2-bedroom rentals, ended up moving the whole thing for $75 million, still made a nice profit versus getting stuck with a hotel at a 20% or less vacancy factor. That's a losing number if you're in the hotel business. Our buddy Garrison Gilbert is one of our students out of Maryland. He's doing the same thing in Pennsylvania, taking a small 55-unit room hotel and turning it into 42-bedroom apartments. That's a big opportunity. Buying an asset and being able to pivot it in a variety of fashions, okay? Just like this guy is doing in Seattle. Or this was Seattle or Denver, I can't remember. But anyway, taking 170 unit office space, office being hit hard, and saying, hey, I'm going to convert this to self-storage because that's what the city needs. Downtown self-storage units don't exist. And basically got it rented out almost immediately. All the infrastructure in place, 10 by 10 climate control, boom, turned a negative into a positive if you got creative. A lot of people taking big box stores and looking to convert those into self-storage, or taking other retail spots, turning them into office spaces, or WeWork situations, or a variety of different facets. Got to be creative in today's market, okay? But the biggest opportunity still for you guys out here, and the reason why I say commercial notes are a big opportunity for you, is that the big boys don't want to waste their time really below anything below 5 million or even down to 2.5 million. And honestly, that is a huge portion of the bank's portfolio, is that 5 million and under. That's too small for the banks, big boys, but ideally for investors like you and me. And when you start seeing loans that are $1 million plus, the banks get really creative and oftentimes willing to carry the paper on that. If you're going to take over the asset, start doing some things, okay? It's the biggest overlooked by the big boys, okay? And 53%, a lot of the stuff out there has been financed in the last few years from the banks. So if you can start reaching out to the banks and start seeing what's on their books, all the banks we see, especially the banks that are in trouble, 60, 70% of this stuff is in the commercial stuff. Yeah, about 25, 30% will be on the residential side, but the big percentage of the portfolio is in the commercial space. And being an ex-banker, a lot of the stuff here is in a smaller market. And that means a lot of flexibility that you guys can come in, working with the existing homeowners, working with the property owners, not homeowners, and tenants in place to work out and create some win-win. So let's talk about some. Are there banks in trouble out there in Georgia? Yeah. Georgia's got a big banking footprint. We use what's called Bauer Financial to check out and track the banks that are in trouble. And we get a quarterly report from them, get the report for June. We track over 2,000 plus banks that have 5 branches or more across the country. Usually if they got less than 5 banks, they're pretty conservative in their underwriting. Doesn't mean they don't have stuff. It's just they don't have the big footprint that we like to look for in different parts. So when I look at the list, there's 40 banks that are based in Georgia. Now, obviously, we know there are thousands of banks that lend in Georgia. But to try to take it down to a micro level, I just pulled the 40 that are based in Georgia, because we know their footprint is predominantly probably going to be a big chunk of it there in Georgia. So out of the 40 there's $476 million in loans that are already 90 days past due, okay? About 11 million per bank, already 90 days past due. On average, 7.88% of each bank's loans are at least 90 days past due. Yeah, that's not good. About 8% of the bank's platform is default. Out of that 476 million, there's 74 million of it in single family homes in default. They're going to take a little bit of time. But that still means there's basically 401 million in commercial loans that are already getting nasty out there. And if you look at the numbers on there, I looked at all the numbers. Synovus Bank, we've bought debts, commercial loans from Synovus over the last 12 years. Know their platform pretty well. Ameris Bank is also right there equal. Both of them had roughly 13 million in single family loans in default, just right there alone. Commercial side's quite a bit more. But one of the most troubling ones is Farmers and Merchants Trust Bank. Okay. Bauer Financial ranks these banks on a 0 to a 5. 5 being great, 0 being you're dead, basically. Okay. Farmers and Merchants Bank, 57% default rate. Okay. 1-star rating. 1 star, and they went up this quarter. They were a 0-star last quarter. They had such a huge amount of distressed debt on their books. They've bought a lot of bad debt over the years. They have, but they've also got a lot of stuff that they originated that is not good. You don't want to be where over half your bank's loans are in default. Okay. Queensboro National Trust also has 24% default rate across the books. All right. So there's 4 banks right now that we know are looking for ways to get out of trouble. Okay. Now, how do you reach them out? And why would you want to reach out to them to buy the debt to take up their books? Well, a variety of things. You can start looking at the deals now versus waiting for 6 to 12 to 18 months where you're the last man on the totem pole and all the other solutions have been taken care of along the way. You're going to buy this debt at significant discounts depending on the location, the foreclosure time frame, the values, the condition of the property, what's going on legal-wise with it, vacancy factors. There's a lot of things, but If it's not good and there's negative things, that drops the values down where you can get well below valued properties. Okay. When we talk about foreclosures and things like that, most of the foreclosures are selling at market level. We're not taking a big discount on the REO side. The debt, though, is where the biggest discount is, especially on the commercial side. You can control the asset for as little as 30 to 70% of as-is value, not UPB. Well, UPB stands for unpaid balance, or the lesser of the two, the balance or the property value. You can get it reinstated, modification, short sale, short payoff, foreclosures, loan sales, deed in lieu cash for keys. In the commercial loan side, what's really nice in the commercial loan provisions is the right to start collecting rents if the borrower stops paying you. You can step through it and start collecting the rents directly, and then basically take over the note, turn it into either it's your own cash flow performing note, or take it back and do what you want with it. Foreclose, sell the asset off, flip it to somebody else, re-gentrify the asset, increase the rents, whatever you need to do to make it more desirable, you can do that. And we've done this over the years, not just the last year, but over the years, done a lot of this. Other advantages of note investing, you're not having to do direct mail. That's one of the biggest things when it comes to people looking to invest, is they don't have the extra money to budget to sending out postcards or bandit signs or doing all that stuff. You don't need that stuff. We don't mail postcards. We don't do any of that letter stuff. That's the last century. Come into the 21st century. Let Scotty beam you up into the 21st century in marketing. Because if you've got an email address that you can send out from a professional email, on LinkedIn, and you're not afraid to pick up the phone and dial for dollars if you need to, great, you can do this business. One source, one bank can lead to hundreds of deals. Synovus Bank has been sending me a quarterly spreadsheet for the last 10 years on their stuff that's in default they're looking to get rid of. That came from phone calls. It also came from reaching out on LinkedIn and a few emails. Hey, one source, which those cost me just my time. That's the beauty of this. A lot of real estate investors go chasing after the borrowers. I don't want to chase after the distressed borrowers, the out of town, because what's the likelihood they're going to have more than one property? Very, very small. I would rather go direct to the source and get hundreds of deals, if not deal flow on a regular basis, by making one contact, okay? And you don't have to buy everything. You can cherry pick the ones that you like for your portfolio. If the pricing doesn't make sense, great, pass on it, move on, or follow back up. If you want to buy in bulk and you got the opportunity to do that, great, you can do that, get even better pricing on a variety of things. And a lot of these banks will have residential commercial assets they're looking to get off their books. I've talked to two banks last week that had a borrower who's been on their portfolio with commercial and residential assets, been on time for 50 years, their portfolio. I'm not joking. 50 years a guy's been a client of this bank, and the bank is looking to sell his debt as a discount because he doesn't fit in with exactly what the bank is looking for. Okay. Now, how many of you guys in the Atlanta market, you probably have some of that stuff. Okay. Here's the thing. You don't need to use your own capital before. The bank doesn't care where the money comes from. You don't have to season it. There's plenty of other investors out there that you can raise capital from to take down these deals. There's plenty of investors in the Atlanta market. We know this. Okay. There were 15 million homeowners underwater in 2010. How big of a piece of pie, if you could go back in time now, 10 years, and do things over, how many of those would you want to take down? And the biggest regret I have, and a lot of investors, that we didn't buy more back then when it was on sale. Now, we're still trying to figure things out with where the market's at, but we're going to see a lot of deals. If you can be prepared to do it, great. If not, you can be like everybody else and sitting there twiddling your thumbs and watching Game of Thrones and wondering why Cersei did what she did. But anyway, are there investors out there? Heck yeah, Atlanta is got. You can't throw a rock without hitting to investors out there. There's across the country $9 trillion in retirement funds out there just sitting to be implemented. That's across IRA accounts, 401k accounts, just sitting out there waiting for somebody to call out and reach out to them. Now, out of that amount, in Atlanta alone, there are 63,000 investors in Atlanta that have an IRA. Okay? 63,000. We know we can track this stuff. Out of that 63, 44,000 of them have 150 grand or more in their account. Oh my gosh. How many investors do you need to talk to raise $1 million? 7? That's a small bit. There are investors everywhere in the Atlanta market. It's one of the biggest investor markets in the country. Now, if you look at, besides just the people that have money in their IRA account, that's 44,000. There are actually 51,000 real estate investors, people that's their job title. That's how they rank themselves. 51,000 real estate investors in the area as well. So if you get deals in and you don't want to take it down, you know what? Turn it into a deal creator. You can find the money, find the investors, you find the deals. You're the hub. Put the buyers with the money, or you take the money down, or hey, flip it to somebody else to take it down. There are so many people looking for deals, and just not in Atlanta. There are millions of investors across the country, but Atlanta's got one of the biggest investor bases in the country there for you guys. Ridiculous, whether it's there locally or even in other markets out there. And the question I always ask people, do you want to be the banker or the borrower? Now, everybody's, I want to be the banker. Well, why? Great, because the money's coming into you. Everybody's in the note game. Everybody out there that's watching this, listening to this is in the note game of some sort. If you've got a mortgage, a car loan, student loan debt, credit cards, Uncle Bobby Joe down the street, $500. You're in the debt game. You just out the wrong way with the payments going out versus the money coming in. You want to be the bank, all right? Because then you've got all the buying debt. You got all the flexibility the bank can do with the borrowers. You got all these things, and the bank always wins, okay? The bank always wins, everybody. That's why the banks are the biggest. They're not in the rental market. Banks aren't in the fix and flip market. Banks aren't in the short-term rental market because it doesn't make sense for them. You want to be in the note game. You want to be in the debt game. You want to be in the paper game because that's the first person that gets paid besides Uncle Sam. All right? So now how do you tap in this deal society when we know it's already hitting us right now, okay? I've been teaching real estate investors how to tap in and be a note investor, debt investor since 2010. That's why they call me the note guy across the country. I've helped thousands of investors purchase their first non-performing note and move on to buying their second, third, 10th, 20th, 100th. Don't care if it's residential, commercial deals. We've helped people of all backgrounds, all experience levels dive into this business and really make some things. And whether they were looking for cash flow, whether they're doing it as a hobby, or they wanted to replace their income, or they wanted to add assets by finding deals in their neighborhood or other markets that they were interested in, great. Or they wanted to buy one-offs or in bulk, we've done it across the board. Like I said, I bought over $500 million in debt for our own portfolio with trades anywhere from like 25 grand to 5 million plus. One-off note for $7 on a property that I flipped for 5 grand is the cheapest deal I've ever bought. But there's so many deals out there that people can get started for 25 to 50 grand if they've got that, or they got a brother. Oftentimes you pick up an aster too and get your feet wet to make some things happen. And like I said before, bank doesn't care if you're behind on your mortgage. They don't care what your credit is, or if you're using your own funds or somebody else's funds. They just want a wire to show up to take that deal off their books so they can transfer to somebody else to work out. So like I said, you can start getting deals. You don't need huge overhead, don't need an office, don't need a state license in most cases. Atlanta's weird. If you're buying Atlanta or buying Georgia, they want you to have a mortgage broker's license, or you can use your self-directed IRA to fund the deal is the one exception from that, or just buy in other states out there to get things happen. So that's a beautiful thing. You can start getting deals sent to you right now and making money by wholesaling to other people, to flipping, to stay, keep a cut and go from there, let them operate it. So I don't care whatever your focus is. Like I said before, single family homes, apartments, hotels, retail office, self-storage, mobile home parks. Don't care, whatever asset class it is. You have the opportunity to really create some win-win scenarios, not only just for yourself and your team, but also for the borrowers out there. Those are the people we talked about at the beginning that need the really big help. Whether you're like Sheila here, lived in this house for 20 plus years, refinanced it, pulled some equity out a few years back, and then the market crashed. Then her husband got sick. Tried to do a loan mod for 4 years when we bought the note. We were able to negotiate a loan mod roughly in 30 minutes on the phone with her, where she was able to stay in the house. We forgave all the back payments that she was behind on, dropped her balance down a little bit, dropped her interest rate down to 0% from 7% at the time, and still made money. That's right. I still made money doing a loan mod for the bar because I bought the deal so cheap, and the money that she was making in paid me for 6 years and more than enough paid up for it. There's so many great stories out there that you can help people. If you've ever got a why and want to do something and really feel like you do some good, here's how you do some good. Because a foreclosure not only affects that bar and that family, it affects the neighbors. It affects people on the block, people in the zip code, the city, the state. Because every foreclosure affects everybody around it. Immediately, it can drop the value of the properties in an area 5, 10, 15%. And we saw that happen. Buying the note and keeping somebody in their house keeps that kind of that A-bomb, that nuclear bomb of debt to go off. Save it, keep them in the house, and make America great again, one defaulted borrower at a time, I like to say. Okay? So you can do it big or you can do it small. I don't care whatever your appetite is. We just need people out there who are ready to rock and roll when the market hits. Not waiting around, but to get started now. Kind of like Gene, my buddy Gene Chandler here out of Elkhart, Indiana. When I met him about 5-6 years ago, he was buying occasional little deals here and there, working full-time as a hotshot driver, driving cars all across Indiana, Illinois. And he took our training, learned, we spent some time, mentored him, worked through with him, and he's done an amazing job in the last couple of years. I got a text message from him about 3 weeks ago talking about the fact that he goes, Scott, thank you so much for your training. He went from basically buying stuff with just a little bit of money he has to raising over $13 million in funds from other investors, closed on over 35 assets, got his own fund going now, and making a huge difference in his life. Pretty good way to retire and do something that you enjoy doing on a daily basis. Gives him a lot more time to paint duck mallards, which is one of his hobbies, and work on old cars. Okay. You could also be like Laura Blunt. Laura Blunt was like many investors, people that got, left the W-2 employee kind of job and was going out being an investor, trying to wholesale deals, trying to flip, trying to do options, trying to figure stuff out. When you live in a competitive market like Austin, Texas, which is very competitive, like Atlanta, a lot of times it's difficult. Well, she found the note business, and we taught her how to do what she does. She went off and immediately bought 2 deals roughly in the first 30 days of our training, and then really did amazing things. At the end of the first year and a half, she bought 16 total. And then you fast forward a couple of years now, she's getting ready to close. Well, she's ready to close on over 100, but she's ready to close on another portfolio of 100 notes by itself. $4 million pool with either other people's money or she's using a line of credit from a fund. So really excited about what she's doing. She was able to move into her dream house that she's always dreamed of moving into just this last month alone. So we're so proud of what she's done, changed the future, the destiny of her and her family by doing some amazing things and learning to be in the debt business. Keith Collins out of Ohio, an amazing guy, got quite a bit of history and background in real estate. Also been in city government. I think he was a mayor of a small town at one point, but does a lot of stuff with the local governments. He got in the note business, started dabbling on that 2 years ago. Him and his wife really took to it, and they've done some amazing things. So much, he sends me an email 2 weeks ago as well and says, Scott, it's been an amazing ride. My wife and I made over 7 figures last year because of what we learned in the note business. We expect to do that in 2020. And so I'm really proud of them. He's doing this basically. He says, I'll never retire, Scott. I'll never retire, but this is something that makes it fun. It's fun to show up every day and do some amazing things. Now, all these people had some real estate experience, but we get really excited about those that have no background in real estate or are a little bit younger and want to do something with their lives, just like our buddy Raphael in San Diego here. He was a business owner out in San Diego. He had a car detailing business. It was great. He was making good money, 15 full-time employees. In San Diego, came and took our classes in December, bought 2 deals. He came in November, bought 2 deals in December in the first month. And then you know what happened in March? Corona hit. By that time, he'd already bought 3 more, started raising some capital, but then he had to shut down his business. Nobody wants to detail their cars if they're not driving. And he goes, Scott, I'm so happy I found the note business. He's actually got the 2 that he first bought are reperforming now, bringing in roughly about a 20% cash and cash return to him. The next 3rd and 4th deal, he's flipping and making a nice chunk of change, about a 50% profit in 6 months on those 2 deals. And the 5th one, he's still working out with a borrower, trying to figure it out. But in his words, he had no real estate experience, didn't even own a house yet, but he's out buying notes. And that's the beautiful thing that we love about our students. And the way that we teach, we make it that everybody can understand it. I'm not going to talk in layman's terms, but I'm going to keep it simple, Scott. KISS. I'm going to keep it simple for you. Realize that you can reach out and buy debt from banks. There are people out there, oh, you can't buy banks. You got to buy direct from me. That's bullshit. You can buy from Synovus. You can buy from Capital One. You can buy from some of the bigger banks out there, even smaller banks. Now, you're not going to buy a one-off note from some of the bigger banks, but there's plenty of lending institutions out there in trouble. And I can show you how to find those deals and identify the banks that you need to reach out to on a monthly, quarterly basis. And we've been doing this for thousands of investors over the last 10 years, really making a difference, not only in their lives, but in America, helping them keep the people in their houses. You actually make more money in the note business by keeping people in their houses than foreclosing. Okay. How do you do that? Well, guys, if you really want to learn how to take it to the next step, really learn how to implement these things, it's not complicated. We teach a 1-day class called Note Weekend. Come spend a Saturday with me. We usually do it the 3rd Saturday of each month from basically 9 a.m. Central Time to roughly 3, 4, 5 o'clock in the afternoon. It's me teaching for the day, not a pitch fest, not videos, or I'm talking for 5 minutes and you watch a replay. No, it's me teaching the information. All right. And we cover a lot of things. We, like I said, it's 1 day intense. We take a couple little small breaks, but mostly it's like you're getting a fire hydrant for a day. We live stream it on Saturday via Zoom, just like this. If you miss it, you can catch the replays on Saturday of what you miss on Saturday. I mean, you can watch on Sunday what you miss on Saturday, or later on the week if you can't make it. We call it the Cliff Notes version of note investing, and our students that have taken it, several of the people you saw there retaking it, said, man, this is a great refresher, great stuff to focus on as the market's changing, because they're salivating like I am right now, because we know there's so much opportunity if you know where to look, okay? And it's not an expensive investment. It's $49 investment for your part to spend a day with me. And you know what, guys and gals? It's usually 99 bucks, but we cut it in half for everything going on, make it a little bit more affordable. Like I said, we've got an upcoming one Saturday, July 25th for you guys. After that, we've got one in August, third weekend in August. And so what do we cover? We cover the very first part of the day, how to find those deals, where and when, and how to find deals direct from the bank. The second part, we'll talk about how to fund these deals with other people's money. We'll dive into the third part, talk about different exit strategies, how to make money with the deals, what kind of strategies should you look for, how do you do your due diligence and identify deals that make the most amount of sense. We'll talk about the vendors that you need, and that's the beautiful thing. You're not the guy or gal doing it all. There are so many vendors to help you out in a good way, not a bad way, but people there to help you, depending on which way that goes with. There's attorneys, there's real estate agents we show you how to find, there's servicing companies that do the call out. You're not going to have to be the guy or gal calling the ball or going knocking on their door. That's what a lot of people get scared about, because they think they can only do stuff where they can drive to. No. We buy notes all across the country, and we teach people how to buy all across the country because there are professionals everywhere to help you along the way. We'll talk about some of the loan trading platforms that are available for you guys to take a look at notes right now. You don't have to wait. Start looking at deals today. And then there's a lot of other things that we'll cover across the same day as well as we fit in. And like I said, it'll run from 9 to 3, 9 to 4, 9 to 5, because I sit around and I answer your questions. I'll stay as long as you're asking me questions and as long as you guys are interactive and making things happen for you. And like I said, just for 49 bucks, I'm not looking to get rich off of this, guys. I'm looking just to make it worth my time. And if you want to be one of the 1,000 people that we help in the long run, we start putting into the pipeline, starting to get deals, this is the opportunity. And if that's not good, you know what? I'll throw in $1,000 worth of bonuses as well. Like I said, one-day note training, they're usually $99, that for half price. We'll actually throw in a one-day training of me calling banks, literally me calling banks for 4 to 5 hours. You'll be able to watch, hear, listen, and see me actually making the phone calls, asking questions of why I said that, why I didn't see who I call, and literally listen. It's such a great learning opportunity. That's usually 49 bucks by itself. We throw that in. We'll throw in the most recent Bauer financial list. I get signed up. That list alone costs me 360 bucks to buy. I'll throw that in as part of what's included for you guys. So you can start looking at the list and see what I'm talking about in tonight's thing, or other things out there as well. All right. Also, I charge $1,000 for consulting for an hour. You know what? I'm going to give you a 30-minute phone call after the class to sit down, talk you with you, see which way you want to go, see what you need to do, what you don't need to do. Some people want to do this for 10 hours a week. Others are more full-time. We'll discuss those two different opportunities for you and which way you should go, okay? We'll also throw in the replays are included, and also if you got a spouse or business partner you want to invite, you can do that. That's included. And then we'll also throw in we've got a private Facebook group that we invite our students to that is great networking, almost 900 plus students from across the country. Such a great resource, very interactive group. People ask questions, people answer, people network, people sell deals there back and forth. They raise capital. It's a phenomenal group for everybody. But that's all together over $1,000 in bonuses. And like I said, we're just charging all this stuff for 49 bucks for you. I want to help teach 1,000 new people how to invest in notes in the next 12 months. And it all starts with this. And you know what? The reason we made it affordable is that way, like I said, not a big investment. You can dip your toes in the water, see if it's something you like, see if it makes sense, and then move on. If it is, great, take it to the next level. We've got a million, well, maybe not a million, we got thousands of videos and some other training you can do. But we want you guys to learn. The best step you can do is to take a one day and spend it with me. Heck, if you're stuck at home, what else are you going to do? Right? Might as well sit at home. So why should you do this? Why should you sign up for this? Well, if you don't already have the answer already, learn how to help borrowers and investors. We all know borrowers in trouble. We all know other people out there struggling. Here's an opportunity for you to step in and be a helping hand along the way. Whether either giving them great counsel because you've been through a class and advise them what they have, their opportunities, or actually finding some deals out there. And like I said, making money, helping people solve problems is a great thing. It's always the best stories we love to tell about people doing amazing things, people helping people do amazing things by staying in their houses, modifying the loans, or being able to retire their wife, their spouse, their husband, their parents, putting their kids through college. Such a great thing to do with the note business, okay? And this is the opportunity to build wealth. This is not a get-rich-quick scheme. It is not, you're going to make $1 million in your first year. No, it takes some experience. It takes some, oh my God, a 4-letter word called work. You got to do some things. You got to get educated. You got to understand the business. You got to put in some hours to make things happen. But if you've ever wanted an opportunity, there is an opportunity, a freight train of opportunity staring you in the face. You can either get on that train or get run over, everybody. It's the opportunity of a lifetime. If you didn't do it 12 years ago, guess what? Karma's calling and God is telling you, here's the answer and the opportunity for you to build some wealth if you ever want to do yourself in trouble. Or get out of trouble, even that as well. We all know distressed borrowers. We all know distressed property owners, guys and gals. Like I said before, nothing greater than helping someone overcome an obstacle or achieve a goal and dream that they thought was once impossible. Or they're hitting the head like, oh my God, how in the hell am I going to get out of this? The biggest thing I love getting is when we talk to borrowers and I'm like, oh shit, you're the bank. I'm like, yep, hang on. We're going to work with you. Let's try to figure a way to solve this and make it a win-win. Okay. So once again, to get signed up, go to noteweekend.com. Very simple. Opt in there, ask you to fill it out, $49. We'll send you out also a 20-page manual the day before the event. So you can download that, answer through it. We've also got a bunch of videos in there too of conversations or interviews with our vendors at some of our different events. So you can learn a little bit more about servicing. You learn more about foreclosures, learn more about title, some of the things that you'll need to know as you get rocking and rolling. Like I said, live streaming on Saturday, restreaming you the replays on Sunday. No, you don't have to wait 6 months for the replays. We get it out the next day for you. Like I said, learn the cliff notes of investing. I don't know about you guys, but when I went to college and we had to read a book, I went and got the cliff notes, and they helped me get through pretty much what I need to do. So I dove in a lot sooner. And I read the cliff notes because that was entertained me enough. If I liked it to the cliff notes, I'd go read the book. But this way, it's still knowledgeable. It's the same opportunity with our Note Weekend class. One day, 9 to 3, 9 to 4, 9 to 5. Depending on how many questions you want to ask, how many people in the class. But I encourage you, like I said, if you can't make it this third Saturday, hey, get signed up and we'll get you to be a part of the next one that comes along there. So if there are any questions, I want to open it up to you guys here. Any questions, comments from you guys out there before we wrap it up for the evening out there. So once again, questions, otherwise go to noteweekend.com and get signed up for you guys. The schedule is broken down half hour by a half hour on there. So you can actually go to Note Weekend, scroll down and see exactly the different sections we talk about. Some are, and usually we stay pretty on task for the most part. In the 4 or 5 times I've taught the class over the last 4 months, we started doing this in February. Stay pretty on time for it. Run a little long sometimes, but that's okay. I'm fine with that. So once again, guys, I encourage you, if you really want to make and take advantage of the opportunity and make some big difference, not only in your lives, but in the lives of your family and others out there, get signed up for Note Weekend today, and we'd love to see you this Saturday. Otherwise, have a great evening, and thanks for being a part of the Note Nation Top 40 Tour. See you at the top, everybody.